the way in which social media has led us into this day and age. Let's keep up with the Kardashians, This is the problem that we have with society these days. The youngsters will go and blow a couple $100 on the weekends. They'll go out Friday night, Saturday night and spend $400, $500 on a weekend. Whereas my era back then,
yeah, tell me.
I wasn't spending it.
Okay.
That's the truth. I wasn't spending it.
Come on, give me the intro, man.
Start. Forget about your intro. Just fuck the intros. Fuck everything.
Surviving the digital jungle is tough. We're here to guide you through it on the Digital Jungle Podcast.
Welcome back, everyone. Thanks for joining us again for our special podcast. Today, we have a repeat guest, a special guest at that. We have one of the leading financial brokers across Australia joining us again, Allan Shenouda. Today, why I'm excited about today's podcast is genuinely it's about sharing and educating a lot of people about a market that has sort of prehistoric or a fixed opinion on what brokers specifically do. So what I wanted to do, I wanted to get Allan in here today so we can really sort of open up dialogue about what brokers actually do, and specifically what Allan's business, Bespoke Financial Advisory, offers as a financial firm. Thank you so much, Allan, for coming in today, man. I really, really appreciate it because I know, man, our relationship over the last 12 or so years, I know you run 100 miles an hour. You barely have time for anything. So I really, really appreciate you taking the time to come and speak to us today. Thanks for joining us. What I wanted to kick off the conversation with is, okay, so this is just so I can frame it for everyone, right? So you are a broker, right? And in brokerage, there's so many different types of things. There's typically people might call you a mortgage broker. Would that be a fair, or is that the right assumption to make? Like, you're a mortgage broker?
No, far from that.
Okay. So what would you say, how would you sort of explain what you are? Or what does Bespoke Financial Advisory actually do?
Yeah, so I guess probably the easiest way to answer that, some people refer to me as their own personal psychologist. Okay. In some opinions, advisory is what we do a lot of, solutions based. So a lot of clients are trying to basically fix something in every instance, whether you've got a husband and a wife. Typically, the wife wants to upgrade, wants to do something, husband's aspirational goals. We work with them to be able to achieve those goals.
Okay. So when you say solutions, right? Okay. So this is why I'm like super, I get up for these type of podcasts because I want to dive deep in it. When you talk about solutions, right? The finance sector is huge. So like let's break it up. You've got home loans, or let's call them residential loans, investment loans. You've got your credit cards, your personal loans, you've got asset finance being, say, for example, your cars, your machinery, and then it goes... It keeps going.
So you've got your working capital solutions.
Yeah, like rattle them off for me.
You've got insurance-based products, so to negate the risks, as you can appreciate, we set up our insurance business only just before Christmas.
Yes, I seen that, Bespoke Insurance. Yeah. Congratulations, that's awesome.
So, and that's been going from strength to strength in the last couple of months. In particular, last week we had our record week in regards to 12 claims on the Monday. So everyone can provide insurance. So let's be clear, it's just a commodity, but the real testament to your ability is when you have a claim and being able to, achieve that claim. And I guess, on the Monday we walked in and we knew.
The floods.
Floods was catastrophic, and I sympathize with the wider audience if they've been affected by
it.
Most homes were affected. I can tell you, clients that have big machinery on their farms, lost all that. Yeah. I've got a client that's just won a massive $40 million project, first stage of this, and $10 million worth of assets were flooded. You cannot replace them. So thankfully, Coda, who's my leading insurance broker, has been in the sector for 12 years. And myself, we basically worked on the Monday after the floods, and we had 12 claims on that Monday, and 11 of them were claimed. Okay, wow. Successful. The only one, and it's a bit funny, one of the clients wanted to claim on landscaping. Okay.
Okay.
Yeah. We asked him how much, and as funny as it is, and without taking anything away from the claim, it was $1,000 claim. I referred him to the MyGov website, which under natural disasters.
Oh, yeah, you get the
they were
1,000.
They were easy to claim that. And I guess so if you look at that, it was 100% success rate. So
wow, well done.
Yeah.
Well, okay, so let's circle back. So you're saying solutions, right? So you've got solutions all the way through, like once again with finance, you've got, even when you start to scale up, you've got development loans, right?
Yeah.
And so on an educational piece, right? So is it the same sort of process as an investment loan? Is it the same sort of, like, so you've got development loans and then it keeps on scaling up?
Sure.
Like, does it go all the way to like private financing? Like how many more does the general person not know about finance?
So I guess, a simple investment is, buying your first investment property.
Yep.
It's as simple as that, Again, I'm just going to use it for a collective. Husband and wife want to go buy an investment property. There is a financial benefit for them to do so. It's a yield base, depending on the type of investment that they're buying. Let's assume it's a residential investment at the moment. We've seen interest rates stabilize at the level, but obviously with pressures, they're going up.
Yep.
And we know that they're imminently going up. Again, it's been a great time for the last couple of years to buy investment properties because the yield return has been quite good with the interest rates so low. They've bought it for a reason. Tax minimization, negative gearing, all those different facets, asset creation, let's buy something for our children, which is what we all do when we have our children. We want to set them up and give them a future that we didn't have.
That's right.
So I guess that's as simple as it starts. And then from there, that investment, okay, it does have to make sense for them to buy an investment, has to return the right yields. Then we go to a bigger investment, and it might be a duplex investment, where they buy a duplex site, sit on it for 2 years, get a DA or a CDC, which is a compliant development for the wider audience, and then they look at doing that and build them both. Do we hold one? Do we sell them both? Those type of rationales. And that's the next level of investment. Then you can go to townhouse development, small, medium-sized unit block investments, and keep going and going and going based on your...
Every time you get to another level, there's a new set of criterias, right? And so from my understanding, working quite sort of close with a lot of businesses and a lot of sort of entrepreneurs in general, what you realize is understanding the next level and its requirements and having an expert actually guide you throughout that process is actually like almost, I would say, the most crucial bit. Because if you don't apply the right solution to the client, it can actually go like, because the margins sometimes are slim.
Correct.
Am I right in saying that?
Totally. Especially what we've seen in the last, look, the biggest problem that we have at the moment in the marketplace is, ProBuild, massive, it's public knowledge.
Yes, ProBuild, yes.
ProBuild going under has a systemic issue on the wider.
Oh, okay. Well, you use the big buzzword systemic. Tell me about that.
So you're basically going to see a flow-on effect of that. So what we saw, we've seen construction costs dramatically increase by 20 to 30%. Now, historically, banks have only had a 5% contingency there. Private funders have only had a 5%.
Let me just educate the audience. So when you say a 5% contingency, that means the banks have only had a 5% buffer.
Yeah. So
is that what you mean?
Yep.
So and the material costs have gone up by 30%.
Up to 30%.
Up to 30%. And the banks are only sort of really adding a 5% buffer. So it's whacked everything out.
Totally. And then builders historically are only making an average of 15 to 25%.
Oh,
typically.
Okay, sorry. I'm going to keep on interrupting you because
fine.
You know what? You're giving sort of, if to those that are watching, this is extremely valuable information, right? You can Google and you can go get 1,000 different sources, but you're hearing it from the horse's mouth. Someone's been in the game for so long and has seen essentially how it really all works. So you're talking about a 15% margin, right? And just with the increase in product cost or material cost, you're now down 15.
Yeah. So builders are my biggest concern.
Okay.
The builders over the last 12 to 18 months really have not been able to exercise price increases because they've signed these contracts so prematurely or so early on in the piece. Delays we've seen, COVID delays, flooding. Okay. So we've had rains for the last 6 weeks. That has a flow-on effect. Now, your average medium to top tier builder has not been able to increase their pricing to the developer.
Yeah.
So, you look, is it going to have a flow-on effect? Hell yeah, it is,
So can I ask you a question? So you have a client, right? They're with you. Bespoke Financial Advisory. They're account managed basically by one of the leading financial experts in the game, in my opinion, right? Now, there's another client with another broker, right, who probably hasn't got the depth of experience you have. Sure. Tell me some of the sort of items that you're considering how to navigate your client throughout this sort of tough time, or do you know what I mean? Like, because you are solutions based, yeah. And in my assumption, your solution is most likely going to be better than the next person's because of your experience, your care, your passion in the game, right? And you've seen it all before. So tell me, how do you guide them? Like, what makes your solutions better? Is it because you've seen it before? You know how to make them pivot or cover them through insurance? How does it work?
Yeah, I guess probably the most important factor to take in consideration is my tenure in the banking sector. And I guess I've seen it, in the early 90s, when I first started my career to
that's
now.
interesting.
And I guess the biggest concern that a lot of people have had, and people that know me will know that I decline a lot of deals. Okay. So I won't say it. I won't do the deal for the sake of doing the deal. I don't care. I care about the client's outcome.
You have integrity.
I want that client to be with us. As I grow and I acquire property, do my own developments, diversify my income stream to complement my existing business, I expect the same for my client base. So as the journey projects, I expect my clients to grow and learn from that. And sometimes it's not going to be the ideal investment that the client comes to me. I look at honestly hundreds of feasibilities a month, and whether they make sense, I'll tell the client, nah, yes, no, let's look on it. A bit fine here, whether you're a builder looking at this development or you're an investor looking at this or a developer, I'll give them my own personal opinion. Okay, it's not black and white. It's always grey.
Of course,
there's different facets that affect a viability of a project. It's not just about the black and white on the numbers.
You're 100% right, because look, I've always believed this. Some people say numbers are numbers, and it is what it is. The numbers should add up to something, and is it profitable? Is it not? But I say that there's a story behind every number, right? And numbers also, you can bend them, right? And in saying that, sometimes when someone's so gung-ho on a particular project or whatever it might be, sometimes it's they sort of bend the numbers so they can convince themselves it's the right thing to do. And sometimes it's a hard conversation, don't you think?
Yeah.
With some of your clients, especially when you see them grow and you see that they may be making a tough decision here. Yeah. It'd be hard, wouldn't it?
Yeah, totally. Look, I get referred a lot of clients from friends of friends of friends of friends and associations. And I guess the one thing they'll know is Allan will tell them the truth in every instance.
Yep.
I'm not afraid to say, no, this actually doesn't make sense, or no, this is not for you.
Yep.
Okay. Yes, there's risk. We take risk in everything we do, but it's a calculated risk. We look at numbers is one factor. Look at the personal circumstances of that individual. Look at the tenure. Look at the integrity of the builder. Look at the CV. Look at what they've done in the market. Understand the areas. What's happening now with interest rates going up, with discretionary spending being, minimized. Okay, people will start going overseas. Will people go and invest in North Coast and South Coast if you're going overseas? Every year people, in similar affluent positions will go overseas with their family of a couple and go and spend $100,000 on an overseas holiday. Are they going to go and spend that and invest in Australia anymore? No, they'll go and spend that overseas. We have had no choice but to invest in Australia, for the last couple of years with COVID and all those.
So we don't even know where the dust's going to settle.
No, the one thing I'd be saying is I've been advising my clients in particular, and this is my own personal opinion, because obviously advice is regulated, and we as mortgage brokers or finance experts are not deemed acceptable to provide that. But I'll give you my own personal opinion. Do I think there's an opportunity for people to, if they've got an underlying cash flow business, support and leverage against their current assets and get ready for some good opportunities over the next couple of years?
What is your opinion on that?
Yeah, so look, interest rates are going up. There's no ifs or buts, it's going up.
Yep.
Do I need interest rates to go up? On a business perspective, we thrive better in an economy with a higher interest rate market. Okay?
That's interesting. Look, to the average person like me, it doesn't make sense because it says, well, how do we thrive in business if people have to pay more to their mortgages?
Yeah. I guess there's things you got to factor in. Look at the unprecedented growth, okay, that we've seen in properties.
Ballooning.
Okay? 40% in the East, year on year. Is that sustainable?
No.
Hell no.
No.
Who's buying those properties?
Mm.
Australians.
Yeah, they are.
Okay, it's not overseas migration.
Used to be.
Used to be. So, but we've had the strongest level of growth in the last couple of years that we've seen. Now, if you look at an average of a 10-year cycle, our average growth is 5 to 7% on average.
Yeah.
So when you look at it and draw it out, okay, no problem. Are we going to see a level of sustainable growth that we've seen in the last couple of years? No, we're not. Okay.
Do you think it's going to retract?
No. Again, this is my own personal opinion. I think we've hit the top in the economy in regards to residential properties. I think the next level of growth will come out of residential investments. Why? First home buyers will be affected. First home buyers cannot go buy at Edmondson Park or out at Box Hill.
Why?
Those properties are $1.2 million now. An average person, two couples, average income of $100,000 can't afford that.
Okay, Alan, I've got a good story for you. So I was sitting down having a coffee with a few friends, right? As you know, my Friday night crew. Now, there was a debate, and there was a debate of the current sort of market favors the old money people. So people that got into the market a long time ago, and it favors them, and it does not favor at all anyone entering the market, right? So before you,
broad statement to make.
it is very broad. But in saying that, essentially what it was, the conversation was, it's virtually impossible for people to enter the market as a first home owner or someone who wants to dip their toe into the investment market, right? It's virtually impossible. And gone are the heydays. And they called 10 years ago, or 15 years ago, or 20 years ago, the heydays, right? I got on my high horse, and I was like, that's a myth, okay, in my opinion. So I'm going to explain to you my opinion on it. And I'd love everyone who's listening, please put your comments. I might be wrong, and I'm always willing to say, hey, listen, I stuffed up. But this is how I framed it. So we go back, I think it was around the year 2000 mark, right? What was the average interest rate? I think I Googled it at the time, and I think it sat around 7.5%, something along those lines. Okay, great. Let's go at the 7% mark, all right? 7% mark right now, average for fixed, if you were lucky, maybe 3 to 6 months ago, it was 2%.
Yep.
Agreed? Great. So therefore, in the year 2000, it was 3.5 times higher, the interest rate. Awesome. Now, let's go back to the year 2000. Let's say, I don't know, what would you say in the southwest region, right, of Sydney, what would you say a property would have been worth? The average block, 500 squares, an old sort of brick home. Yeah. What would you say it was worth back in the 2000? Just a guesstimate, like that.
300, 400,000.
Fantastic. All right. So my opinion was 300 to 400,000. Back then, if you're paying 7%, it's exactly like you paying $1.2 million right now in interest.
Yep.
Because it's 2% right now. Back then it was 7%.
Sure.
So therefore, you were still outlaying what we're outlaying right now. Yep. Even though the price is 1.2 million right now, and back then it looked like relative. 300. It's relative.
Correct.
But the actual spend in interest, the interest component is relatively the same. Now, go back 20 years ago, and in the year 2000, I don't think people were earning what we're earning right now.
No.
We were earning a lot less. So therefore, where's the money going? In my opinion, the mindset of people having that mindset of, it's too tough these days, can't put my foot in the door. I believe the X amount of dollars is just going to different places. And let me tell you, Uber probably is maybe 30% of it, right? Lifestyles are different. You're getting a coffee every morning, and it might be $5 every morning. I know it might not sound much, but I don't think in the year 2000, coffees were popular. I don't think people justified bloody $4 going to a coffee. Am I right in saying that?
You're 100% right.
Okay, great.
My mum's era, and I'm going to use my mum as a prime example.
Awesome.
Sorry, mum. Her era was, let's save as much as we can, buy the investments, don't borrow as much, and be calculated. The way in which social media has led us into this day and age. Let's keep up with the Kardashians, Let's see what we're wearing these days. Let's see what our peers are wearing. Let's see what they're doing. Let's see what they're drinking, what they're eating. this is the problem that we have with society these days. The youngsters will go and blow a couple of $100 on the weekends. And I can speak from experience, my staff are fairly young, some of them, they'll go out Friday night, Saturday night and spend $400, $500 on a weekend. Whereas my era back then,
yeah, tell me.
I wasn't spending it.
Okay.
That's the truth. I wasn't spending it.
And to be honest with you, I don't think we knew any better.
No, I think we were trained not to know. Okay.
I guess so.
Yeah.
Because I don't think we were exposed.
We weren't.
We weren't exposed to the degree of where you can spend your money.
Think about it. We didn't have iPads.
Yep.
Okay. We grew up with no iPads. Our cell phones didn't have all the apps and all technology.
Well, reverse it back one sec. Just the word subscriptions.
Yeah.
How many subscriptions did we have back in 2000? Mate, I think
you can probably count them on one hand.
It was probably a phone line.
Yeah.
Right?
Yeah.
And dial-up internet. But look, this is what I'm trying to sort of explain. I think, yes, it will knock out a lot of people. Mm-hmm. But I feel as though it doesn't sort of kill the hope. Right?
No, not at all.
Anyone that's financially disciplined and has a goal, they can get into the market if they want, right? They just need to be, in my opinion, guided by the right people, correct, right? They need to have a good support circle, whether it be the right broker, whether it be the right accountant, right support network, encouraging them to go a certain way. So, for example, in the way you've seen things, you've seen a whole range of clients, right? You've seen the very prepared with the great team around them, the accountants, etc. And then you've got sort of some of the happy-go-lucky people doing things that seem to be right, right? Do you see a massive difference in these types of people, like the really prepared and the underprepared? Like, is it that big of a difference?
No, I'm finding people are becoming more educated nowadays than they ever have been. Mm-hmm. People are reading more. So yes, there's more knowledge and information readily available. These days the youngsters, and I can speak about my son, if he needs to learn something, he just types it in Google, and his solution's there. Back in our area that didn't exist. And I guess people are becoming more educated. They want to learn, how to, we're doing a little bit of a small reno at my home now, and we've got to hang a 4-meter beam across from one side to the other. So, I looked, okay, what do I do?
Google.
Type it in, engineer, ring the engineer, confirm the size of the beam, confirm what it can hold. Okay, perfect. Getting some bifolds done. Okay, no problem. Ring my client. Okay, yep, this is what I need, Eddie. Can you send it to me? Done. Within a day. What do we do next? Okay, ring my builder mate. Okay, cut a hole in the roof. Let's fit it in. And the rest is history. Back in the day, we didn't have that knowledge.
That's right.
Okay, so I guess people are very much more educated in regards to what they're doing, and I think it's a testament. I've got 3 young staff in my office in particular, and over the last 2 years, listening to me how I speak to clients, they've all come into the market. Okay, I've supported them, I've understood what their financial needs were, and they've been able to come into the market at the right time. Okay. And they've all had positive growth in their properties in the last couple of years.
Do you think timing is a massive factor? I've also had those type of debates with a lot of people, like, is it the right time to buy? Yeah. Etc.
Look, I think is it the right time? Put $1 in the bank today, and it's worth $1 tomorrow. Yep. Let's be clear. There's no money holding your money in the bank. Yep. Okay. If you're prudent and you're going to save and put it into a property. If you can afford it, put it straight into a property. You won't regret it.
Wait. Okay. Let me give you context. Yeah. What if I'm the type that doesn't hold on to property? Okay. I buy, expecting a profit, etc. So
then do it.
You still think you can make money?
Yeah.
So what I mean by that is, in my opinion, the market's super high.
Yeah. Do I think you're going to...
Will it drop?
Again, that's a broad question.
Of course. No, of course you don't have the crystal ball.
No, but do I think there's still opportunities for you to make money in property? Whether you're a simple builder, wanting to flip a property. And mate, there is still money in a property.
Wait, but 1 second. Gone. Okay, we're talking about a fine line right now. Yeah. We're talking about a 15% margin. Now, that margin might sit in the cost of what you bought the land for.
Sure.
True?
Yeah.
In my opinion, probably it's it's the biggest. That's where most of your margin's going to sit, right? That's how I see it.
Sure.
Then there might be in how good you are as a builder, or who you use as a builder, what your finishes are. Do you overcapitalize? Yeah. Is the process in building? So, for example, most people think 6 months I've got a duplex built, right? Mm-hmm. What if that became 12? Yep. Right?
The interest cost.
What if I wasn't insured during these floods? Yep. What happens, right? We're talking about 15%.
Sure.
So if you go wrong on two things, being you've paid an extra 10% on the land, right? And you don't manage your building process properly, you're screwed.
Totally. I'll give you...
So what you're saying is you can make money, but what? Like you've got to be a lot more tentative? What is it like?
No, you've got to be more, I guess, more prepared in this market. Mm-hmm. I'll give you a prime example. Is there still money in the marketplace? I bought a site in Marsfield in 2015. Okay. Put a DA on it. DA was approved for 2 years. I chose to hold it because I was doing some other investment strategies. We paid $1.58 million for it. The same site today, across the road, sold for $3.3 million. Okay.
Same site.
Cool. You can only build a duplex on it. Okay. Now.
Wow.
Okay. Back then, build costs were 20% cheaper, 25% cheaper. Was I going to make money back then? Yes. Am I making money still today? Yes, I am. Mm-hmm. Has the holding cost factored in? Has my margin eroded slightly because of the length of the holding costs? Yes. All these things you have to factor in. There is still money in a project. Again, that's the $1 million question. Which project is the right project? It's case by case. Mm-hmm. Okay. Just because your friend invested in Penrith, which is where I grew up my whole life, and bought a property there, a month ago, doesn't mean I'm going to go buy a property there tomorrow and make the same amount of money. Mm-hmm. You've got to look at each investment on it in its own isolation. You can't replicate it. You can't consider yourself a developer or a builder and go, yep, I'm going to make money because my mate did it. And that's what I see all the time. Mm-hmm. Hey, he's been doing it. I want to do the same. Sorry, you're not comparing apples with apples.
That's right.
Sorry, he's got an underlying trading business that underpins his ability to hold it, to negate the interest rate fluctuations or the construction cost increasing. So my construction cost increased from, it actually increased in net, it increased 220 grand in the last 2 years. Now, am I upset about it? Yes. Can I change the outcome? No. Could I have built earlier? Yes. But again, look what's driving it. On completion, I'm going to generate a 6.5% return on residential investment. I'm actually happy with that. Yep. Okay. And this is what you've got to look at. You've actually got to weigh up the transaction itself. Okay. There's some transaction. I get proposed investment strategies, properties. Hey, Allan, do you know a JV partner? Do you know a good builder? I get all these opportunities every day. Can you give me some advice? And the simple things I speak from the heart, for the intention of them to be able to grow and prosper. I want everyone to do as well as I am,
Well done. That's, you've knocked some sense into me, because I usually sometimes I try to put a blanket statement sometimes, and I probably sometimes overcomplicate the situation myself, right? Example, market's booming. It's, in my opinion, it's a balloon. Don't do it. Don't jump in right now for XYZ. You've adjusted that to say there's always opportunity. You just have to, it's a case by case scenario. You have to dive into the numbers.
Has your business grown in the last 2 years?
Knock on wood, yes.
Perfect.
Yep.
Properties have grown in the last 2 years.
Yes.
Okay. Fuel today. What are we filling up today for?
$2.39.
I filled up $2.48 this morning.
Yep.
What a joke.
Yep.
Go to the east, it's even more, probably another 0.2% higher.
Wow.
The factors are relative. Okay. I say it respectfully. As we grow, our investments grow, our desires grow. Today I'm happy to wear, a Lowe's t-shirt. Tomorrow I want to wear a Ralph Lauren. Following day I want to wear better. As we progress in business, aspirationally, I want to do better. I want my clients to do better. You want to do better. You want to see your clients succeed in, the online presence.
Absolutely.
And that's all we want.
That's exactly right. Okay. I'm going to circle back to where we were going earlier. Okay. So let's say, for example, where you can help. So the typical idea of a broker is, let's say, investment property and, buying a home, let's say. Yeah, obviously people do understand on a commercial level, commercial finance. But let me ask you some questions. So let's say, for example, on a business level, can a broker help? Like what I mean by can a broker help? Credit cards, overdrafts. What are some of the typical things that banks offer? Asset finance. You've got when a bank sort of purchases your invoice. What's
debtor finance?
Debtor finance. Now, let me ask you a question. You're dealing with the bank typically, and it's a long-winded process, right? Can a broker jump into that world too?
Sure.
So does Bespoke Financial Advisory, let's say, for example, you account manage a business, and could you go into assisting them with those other products that aren't sort of a home loan?
That's a business as usual. So again, because of my tenure in the banking sector, enabled me to replicate the offerings that the bank do in our business. Right. So we're the conduit, we're the continual conduit that, and more clients, my institutional based clients are now realizing why the need is so paramount to the success of having an intermediary like myself or one of my team members, because bankers change every single day. The knowledge base of that banker, the tenure, the old school bankers, when you used to go into a branch and you speak to any long time, 10, 15 year client on how we used to do business back then, it doesn't exist anymore.
No, it doesn't.
So, oh shit, I just lost my banker. I hear it every day. Just lost my banker after 20 years. I'm sick of, I don't want to tell this again. If I'm going to tell it to someone, I might as well tell it to you, Allan. At least you've been recommended by Joe Blow. We do the same thing.
So you're talking about all the products?
Every product.
Wow.
Okay. And it's not about, and this is the misunderstanding. People, in the marketplace, the perception about brokers, and don't get me wrong, it's rightfully so. Okay. So and I'm not going to go into it in too much detail, but a lot of brokers have become brokers because they chose to do it for the wrong reasons. Mm-hmm. Okay. I had no choice. Mm-hmm. Okay. I was the elite at my previous role in the banking sector, and everyone that knows me know which bank I worked at, and I was at the top of my game. I couldn't go any further. Okay. Everyone said to me, you need to do this.
You were capped.
You're capped. Not financially, mentally. Mm-hmm. What can we do next to our client base? What other options do we have? As a broker.
Stop there. That's so interesting. Sorry, I don't mean to do that, but capped. You're talking about now dealing with certain clients where policies, procedure, types of funding now no longer apply to a client that you've helped grow to a certain level, right? And now you haven't got that freedom to go seek different types of funding and provide the best solution. Is that what you mean? Like you're limited?
In a lot of the banks, you're limited within the parameters of the banks. Okay,
So can you give me an example? Like give me an example. Now I'd love to get two different examples. So sure. I want to give a lot of the audience an insight into how we would call it. Okay, the big dogs, right? So as an example, solution it will be different, right? How do you need to get a combination of institution plus private lending to get a huge deal over the line for a customer? How does it work? Like, what do you need to do to tailor a solution?
So I guess,
and then we'll go to...
So I'm going to use working capital. I love the terminology of working capital, so trade and working capital, debtor finance solutions and all that.
Okay, wait. To those that don't know, trading capital.
Yeah, so debtor finance in particular, the bank buys your debtor book, okay?
So as an example, guys, let's say I've raised an invoice to a business to pay me for works that I've completed.
The bank will extend that in an advance rate of up to 80% for that invoice. So you get the money today. Therefore, being able for you to negotiate, like if I pay Kenan today, for his invoice, I should be able to negotiate better terms. Hey, Kenan, can you give me an extra 5% discount on that invoice? Hell yeah, you pay me today, I will, definitely. So there's flexibility to be able to do that. So debtor finance is a really great product to grow your business aggressively over a period of time. Now, so again, if I want a debtor finance solution at your mainstream banks, okay, that actually do debtor finance, NAB and Westpac.
So you just get boom, boom.
That's it.
Yeah. When you say that you get boom, boom, is it because your experience in dealing with them, they've got the best product for that? They've got the best solution for that.
If your client has a relationship at Westpac or NAB and want a holistic outcome, they go to that bank. Okay. Now, a lot of people don't have that opportunity.
Yep.
So some clients are banking at ANZ, for instance. ANZ have affiliation with Scottish Pacific for a trade and debtor finance solution. Now, are Scottish Pacific amazing in getting an outcome for a client? Hell yeah. I'll be using them regularly. Again, but are you paying a premium because ANZ doesn't offer that solution? Yes, you are. Okay. CBA don't offer debtor finance, but they offer trade. You see? Okay, so they're happy to do domestic trade and, overseas trade, but they won't do debtor finance. You see? So there's different solutions.
So let me keep filling people in, right? Some businesses can really weaken at the knees because of some of the payment terms.
Yeah.
So some people are only paying 30 days, 60 days, 90 days. What are some of the invoice terms have you've seen that sometimes potentially can cripple a business? Does it go up to like 6-month payment terms sometimes?
It can, and you'd be in a major problem if that was the case.
Yep.
So I can give you a prime example at the moment in the construction sector. Okay, if you're with one of the major banks, don't bother. Okay, having a debtor finance facility.
Why?
They won't support you in that regard. And
Wow.
that's black and white. No argument against one of the major banks. You would go to a second tier provider like your Scottish Pacific or your Grow Finance, someone like that, that understands, retentions and, bank guarantee retentions, all that, and performance guarantees.
Okay, so retention money.
Yeah.
You're talking about some people can get paid on the retention money?
Yeah, of course.
Okay.
And funding the builder.
So retention money is when a builder holds a certain percentage, being what, 10, 15%?
Depending on the contract.
Depending on the contract. On the provider, be it an electrician, a carpenter, plasterer, whoever it might be, they hold 15% of their invoice for 12 months, right?
Yes.
Now, only if you're an extremely solid cash flowed business, could you hold that type of, have that much outstanding to you?
In the current environment, and again, I'm sympathetic to the builders in the marketplace at the moment. They're hurting. It's no ifs, no buts. They will hurt. They will continue to hurt. We've seen, the building commissioner do some reforms. Now, is that going to help? No, it has helped certain builders. But our strain with the Chinese, in the Chinese trade agreement has a flow-on effect of building materials going up. That's going to take a while for that to come back, unfortunately.
So do you encourage like relying on banks, like, sorry, the wrong word, seeking solutions?
You can't sit still in the environment at the moment. I'm inundated with phone calls every single day. Allan, give me some options. Give me something different.
Okay, see, this is why I'm trying to, because I know a lot of people that, like I said, the perception of a broker is so 2D. And having the pleasure of knowing you for such a long time, I've been exposed to the wide array of solutions that can be offered to businesses and personal people. I think that's, you're saying you get inundated by calls. Those are from the savvy, the educated, in terms of understanding your offering. Believe it or not, Allan.
Correct. A lot of people don't know.
Yeah, they just don't know.
So the terminology mortgage broker.
Yeah.
I'm not a mortgage broker. A mortgage broker is a residential broker.
Yes.
That's 95% of the marketplace.
Yes.
Well, we're not that person.
Okay, so let me ask you a question. I'm a employed person looking to enter the market. Do I need assistance from a firm like yours? Or sorry, not do I need, would I feel a benefit from using a firm like yours? Or, example, a local broker who, as an example, I don't mean to like stereotype, but they're fairly young. They've just sort of graduated or finished their course or whatever it might be, and they've, they're a local broker.
Yeah, it depends on again without discrediting anyone in the marketplace. I guess the simple answer is this: what do they want to achieve? Do they just want that investment and that's it? Or do they want to know what that investment could lead to and what it means to them?
All right, thank you. That's it. So basically, it's worth seeking proper advice, not advice, using the right firm to help them. Because you just asking that question, changes the game. It switches the whole conversation on its head.
Sure.
Yeah, what are you trying to achieve, rather than cool, what are we buying?
Yeah, and that's the problem that you have in the marketplace. Systemically, brokers just care about the current deal at hand.
Yes.
It's not how we do business. I don't want one deal and then leave and don't hear back from the client. It's not me. And the reason why is that I want to see my clients grow. Okay. My longest client is 26 years with me currently.
Wow.
Still to this day. He's an advocate. He's a mentor of mine. Now, the reason why, because he knows that I speak the truth and I have no hidden agenda. I want him to succeed. I want to learn and I want to continue to grow. I'm continually sponging off my mentors to understand them. I'm constantly having, non-value adding, typically monetary value adding lunches to gain a better insight, because I'm always learning and I want to be able to pass that knowledge on.
You still got the student hat on. I
Have
love it. I love it. That's amazing. Because personally, I would say you're the teacher, right? I'm the student right now, and it's awesome to see that the teacher still has that student hat on. That's the cycle of life. If you don't do that, you can fail very quickly. Wow. Okay, that's amazing. Look, see, I can testify to what you're saying because it is genuinely part of your call, right? Because I remember actually just before we actually opened AiiMS, and it was probably around 12 and a half years ago, and I had met you through a relative of mine, and I was a young boy, right? I was 22 years old, 23 years old, and I'd say maybe me, coming and visiting you, it was so funny because you didn't judge me for my age or the fact that I hadn't even opened. I was working for someone at the time, sure. But in your head, it was a lot of encouragement. Well done. Whatever you need, please reach out. I'm happy to help. Right. And at that stage, you were at the bank and you had no reason. I'd say at that stage, going back 12 years ago, you would have been a senior business banker. Yeah. So you had no business in trying to guide young kids or passing on advice. But I remember early on in our relationship when we did tee up, and it was all about how much confidence and how much strength can you be as a backbone to propel us forward. Sure. So I can say I can reverse and say, like, whoa, you've had this mentality for so long, right? So it's part of, now you've brought it into Bespoke Financial Advisory. You've planted the seed. Now you're starting to see it grow. Yeah. I guess the only benefit, the only people benefiting from it is your clients, really, right. From that mentality. It's amazing. I hope so. When we go back to, say, for example, the top tier, right? So the solution, we're going to go back to that solution. Sure. So we're talking about, sometimes when you see a large, very large development, are they still going to the NABs and the Westpacks to do a $50 million project? Example, I don't know the game, right? Yeah. So it's like I can pick your brain right now because sure. I've got you here.
Yeah,
right.
If you meet a certain metrics, if you meet a certain metrics and you're willing to get pre-sale requirements and it stacks up on a ROE basis, then for sure, the banks are still open for business. Definite. Different. Each bank's different criteria. The same fundamental applies. Same methodology. I guess the biggest thing that I've had in the last 2 weeks is cost overruns and
what's that?
Building cost overrunning.
Okay, yep.
So with the thing, we're getting a lot of inquiries where MES finance is now required.
Wait, MES finance?
Yeah, mezzanine finance. Where it's
MES finance. Okay.
So they need extra funding outside of the bank's approval, which is what they've provided them, to be able to finish their project.
So what you've just done is exactly what I was trying to seek from you.
Sure.
Right. So this is about solutions. Customers stuck.
Yes.
Doesn't mean that they need to hit the wall.
No.
You can help them pivot with the right solution.
Building costs over, increasing in the last 12 to 18 months was not a direct result of a builder's poor planning in any way. It was
not in their control.
What's happening in the Ukraine and Russia? affecting our fuel price. Could we have predicted it?
No.
I've got a background in commerce, marketing. I couldn't look at it. I couldn't see that coming. Okay, what's happening? We're seeing, okay, pretty concerning out there. You know, the floods. What's happened? You know, has it cost a lot of people? You know,
COVID.
Yeah, all these factors are going to affect. COVID smashed a lot of people, but people are stronger now than they've ever been. Okay.
Well, funny you say that, because I was actually having a team meeting this morning, and we talk about resiliency, right? And sometimes you have to try to find a silver lining within any type of negative situation, and sometimes, and for the unfortunate that have had a really bad sort of outcome to COVID and the floods, etc. I really do feel for you. I definitely do sympathize. For a lot of people that haven't had that adverse outcome, resiliency, it's about developing calluses and a thicker skin. Yeah. And during these tough times, now you've experienced it, right? Now it's no longer an unknown. That's a silver lining. Do you like you need to rely on your memory, your muscle memory. Like how did we as a nation pivot? What happened in business? So you can start to learn and be able to sort of apply in the future. No doubt. I feel as though sometimes the media plays a negative role, right? And there's not enough content out there that explains the resiliency part of it. And how to be resilient and how to mentally program yourself and understand, okay, there must be a silver lining to it. And we need to learn, and we need to develop a thicker skin, and we need to be resilient, and we need to be and move forward, right? I just feel as though it's just hard to escape the negative sentiment out there.
Totally.
Yeah.
If the media portrayed a positive thing, people wouldn't react to it. Unfortunately, negative sentiments in the marketplace is all what's been driving. People don't talk about. It's why I was encouraged to talk about our successes, what we do for clients every day. Marketing, I had no clue. I'm a dinosaur. I'm much older than most of the brokers out there. So for me, marketing, social media, was like, what? I don't need to sell myself. Go away. I'm not into it. Like people that know me, I'm quite reserved.
That's right.
And I can.
We had to get you out of your comfort zone.
Correct. And I guess the most important part of anything is that we continue to learn and become resilient and become, better people. And as much as I don't wish it upon anyone, the building sector, the COVID issues, the probable systemic issues that are going to occur out of that fallout, I sympathize with a lot of people in the marketplace. I'm seeing more and more financiers tighten the belt. At every day they're tightening up their belt. What does that mean to the market? Does it mean, oh shit, I can't keep doing what I do well? No, it means I have to be smarter as a financier. I have to give my clients a solution that is going to be out the box. Bespoke Financial Advisory was built on that, that precipice, because we don't want to be known as your typical finance broker. We do things very unorthodox in the marketplace. People say, talk to me about our cash flow. Clients don't even understand half their cash flows, what it means by building a three-way cash flow forecast for them. We do that for them. We help them understand their inflows and outflows of their cash positions. They go, oh wow, is that where I'm going to be in 6 months' time? Oh, okay, I'm happy there. Oh no, I'm not happy there. Okay, what do we need? And we start planning for that journey.
See, now I'm starting to associate so I've gone and sort of interviewed some of your clients over the last few weeks, and the common theme has been the confidence of having someone like you and your firm in the background. It's the confidence. So when I hear that, I then say, okay, typically most people will look at a lot of the successful people as big gamblers, like they'll take risks, high risks, right? And it's actually sometimes on the contrary. Essentially, they're a lot more calculated. They've got a fantastic team around them, being example Bespoke Financial Advisory or example the right accounting firm, etc. It's not as much of a risk anymore. It's just projected out well. The people that are behind the scenes understand the policies and know how to apply the right solutions to allow you to grow. Sure. So that's how I've joined the dots, and that's so so important, because a lot of people out there right now who's our audience, they need to understand that, you know, nothing happens overnight, right? You develop relationships. I can see relationships is like part of your core fundamentals. You need to develop the right type of relationships. You need to be disciplined. Like the core fundamentals in business success never change.
No.
They never change. Doesn't matter what era you're in. And when I say the foundational stuff, yes, you know, a few people might go viral and make some big money, and that's the outlier, right? That's really the outlier, and you can't use the outlier as the average, the medium, right? That's amazing. Look, Allan, what I also wanted to do is I wanted to really dive into so your mentorship, right? You know, I've had the pleasure of dealing with some of your team members, and you can see the energy and the growth. So dealing with you now almost for a year now, and your team members, you can really see the maturity. You can see how you've taken them under your wing. Like as an example, I'd say tomorrow afternoon you're going to almost Cuba, 5-6 hours away, right? Yep. And you're taking one of your team members, Ilias.
Yep.
That's amazing. Yeah. Why are you taking him with you?
I guess, you know, the most important part of that journey is, you know, one of our long-term clients that have really, you know, you want to talk about resilience?
Yes.
This one key client, without mentioning names, has been through hell and back, okay? And, you know, thankfully, we were really strategic in his restructuring of his business. And one of the banks that supported us was Judo in this instance, and they did an amazing job. Yep.
Wow.
And they did an amazing unorthodox approval for this client to really understand his cash flow, and when he had won this first stage of this contract. Now, this is, you know,
can we have some context on this contract?
The contract's
just vague. You don't have to go too detailed.
So Snowy Hydro contract.
Okay.
You know,
awesome.
It's a very large contract, and so part of the journey tomorrow we'll be driving 4 hours into Cooma, staying there tonight, getting there straight after work. So probably arrive about 9 o'clock, meeting the client, you know, for dinner tomorrow night, then getting inducted into the site and having a look at, you know, the infrastructure project being the
How
Snowy
big is
Hydro.
this site?
It's basically an initial budget of about 400 to 500 million. Okay.
Wow.
Infrastructure project, and my client's won stage one of that. And I guess we're just, number one, supporting our client, but also supporting my team member to really show him what it means to be part of the journey, how we went about getting the approval, and let's have a look at what that means in regards to what our client's actually doing out there and what expansion requirements, you know, CapEx requirements, insurance requirements, understanding his working capital needs, you know. So, you know, but talking the talk and not actually understanding it, you know, on black and white says one thing, but really understanding the forward cash flow and looking at the site and going, okay, I now understand that. You know, the relationship manager in particular, Ilias, will look at that journey and go, hell yeah, I love that process. You know?
Wow. See, can I just tell you, like, you know, this is what I mean by your mentorship. And I can tell you, by understanding you, I know you run 100 miles an hour. I've repeated it. And you know, in the last podcast, I know, you know, my business partner, Janti, interviewed you, and it was all about running at 100 miles an hour and how do you keep up. I don't want to sort of continually sound like a broken record, but, you know, you still have time to mentor and bring up, you know, to these, because this is access that it's very hard to get access to this.
Sure.
This is 30 years of you in the game to be able to speak on that level with clients. Does that make sense?
Yeah, totally.
And for someone like your team member for you to bring them with you and give them that access, right, it is unbelievable. In saying that, I do believe that you drive hard, right? And I love it. I think we're missing that in a lot of the new way of how businesses operate. You really drive. If you're driving at 100 miles an hour, you want your team to keep up, right? And essentially, sometimes it's hard for people to absorb that. Am I right in saying that?
Not at all.
What do you say? Like, when I say, what do you say? because I constantly try to reinforce what my criticism is all about when I criticize some of my team members. And it's all about constructive criticism, or when I drive them for evolution or growth, or I try to explain my intention a lot, right? Because I think sometimes, when you explain your intention, it's a lot more easier to absorb from the other team member. Does that make sense? So I just wanted to understand in your head, I know for a fact, because I know you personally, it's not about you trying to squeeze the extra bit out of someone. I know there's a deeper intention. Can you speak on a little bit about the intention behind the drive?
Yeah. So I guess, look, again, every personality trait, it stems from their upbringing. Okay. So, brought up single parent, 2 young sisters, no father from the age of 3.5. I guess, it has an indirect result of where I've become now. I had it in me from the start. People said, we knew you were going to be successful. We knew at what point. Now I'm getting told, at what point is enough? When are you going to be actually satisfied enough? Unfortunately, that's the $1 million question. I'm not actually happy. Am I happy with how the business is performing? On the outsiders, they love seeing the business thrive and do well. I acknowledge sometimes, we are doing very well. Personally, I'm hard on myself. Both my 2 elder children, strive to want to be better every single day. They try to understand why dad works so hard. Why do we want to do this? Why do we want to do that? Why are my staff starting to show the passion and resilience to be able to achieve outcomes for their clients? Because they see it in me. We've just rolled out a scorecard to really give them growth opportunities. I said it last week at our, we had our 10-year planning day, and I basically said to the staff, from today, if I see any one of you in the same position in 12 months' time, you failed yourselves and I failed you.
I love that.
And that's what it comes down to. The same as our client base. If my clients come to me today with a requirement, okay, whether it be a restructure requirement, or a cash flow requirement or a growth requirement, I failed them in not securing their future. Okay. And that's that simple.
Wow.
Individuals, 20-year-olds, okay? When my son turns 18 and he's ready to come into the market because he's worked a couple of years, I want him to be able to go and buy his own property. Yes, I'm going to have to help him. There's no ifs, no buts, okay? But I'm fortunate enough to be able to do so. I want people to have ethical, moral beliefs. I want them to want to aspire to be better, and that's just me personally. I want everyone around me to do well. I want my staff, I want my client base, and my client base are all my friends now. Why? Because they know me. They know there's no hidden agenda. It's not about financial gain. I can tell you now, the last 2 years in the COVID thing, the banking sector hasn't been favorable to brokers.
No,
it's been very tough, and they continue to make it tougher. But like anything, our clients are becoming more resilient, more informed, and we're the same. And we adapt and grow to that level.
Wow, mate. I'm telling you, I got goosebumps because it's very, very, very refreshing to hear your mindset, your heart, because you can hear it, you can feel it. Do you know what I mean? It's and that's why I tried to when I tried to frame this podcast, like we're really giving so much, access, in my opinion, because I was once a young business owner, and let me tell you, if I didn't meet the right people, such as yourself, and some of the other mentors I have, I don't know if we'd lead here.
Sure.
Do you get what I'm saying? And sometimes it's that little piece of content that you might watch on YouTube, or you might overhear, or you're sitting with coffee, you meet a client, or you see. It's always fascinating, and that's why I appreciate you being so open and explaining this, because there's a lot of information that you've just explained that can help someone out there, and I really believe we have a lack of content out there. So I thank you, number one. I hope to get you in again, and I'd like to keep on picking your brain. And we get a lot of questions, and to be honest with you, today, was a common question that I received about you as a client. Do you know what I mean? Like, Bespoke Financial Advisory, like, aren't they just the mortgage broking? Like how they, and it was like, no, you don't understand. They operate on a different level. Sure. Do you know what I mean? And I felt like we had to, bust the myth out there.
Yeah.
But overall, man, thank you so much. I really appreciate it, Allan. Continue kicking ass. I was about to swear, but people have told me stop swearing. Keep kicking ass, man. Hopefully we can get you in a couple of weeks' time to touch on a few more topics.
Thank you, Ken. Look
You're
forward
champion.
to it. Thank you.